This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Industrial action over the past 3 weeks has seen every French refinery debilitated to some extent, hindering fuel deliveries throughout the country and depressing European crude prices as market players look to sell. The action is part of a nationwide movement against pension system changes championed by President Emmanuel Macron, including raising the retirement age by 2 years to 64. The shut-in of French refineries has weakened crude oil markets in Europe. The absence of French demand has increased supplies of crude grades from the North Sea, West Africa and blends from the Caspian pipeline, according to traders.
Russia has successfully redirected all its crude oil exports affected by Western sanctions over Ukraine to friendly countries, Energy Minister Nikolai Shulganov said on Tuesday, while still a decline in oil and gas output this year. The West imposed wide-ranging sanctions, including an embargo on seaborne Russian oil imports, after Moscow sent its armed forces into Ukraine in February 2022. I can say today that we have managed to completely redirect the entire volume of exports affected by the embargo. There was no decrease in sales, Shulganov told an energy forum.
Moving on to the top news in the energy sector.
European Union countries gave final approval on Tuesday to a landmark law to end sales of new CO2-emitting cars in 2035, after Germany won an exemption for cars running on e-fuels. The approval from EU countries' energy ministers means Europe's main climate policy for cars can now enter into force, after weeks of delay caused by last-minute opposition from Germany. The EU law will require all new cars sold to have zero CO2 emissions from 2035, and 55% lower CO2 emissions from 2030, versus 2021 levels. The targets are designed to drive the rapid decarbonization of new car fleets in Europe.
Windfall taxes mean oil and gas producers in the British North Sea will likely leave 500 million barrels of oil equivalent in the ground over the next decade, the equivalent of 1 year's output in the aging basin, industry group OE UK said on Tuesday. Over the past year, Britain has introduced windfall taxes on oil and gas as well as on renewables, which companies say stifles investment and in turn will likely increase Britain's dependence on imported fuels and derail its climate targets. In the oil and gas sector, the taxes are likely to result in reduced investment of between £3 billion to £5 billion, $3.67 billion to $6.12 billion, over the next decade or so, Offshore Energy's UK, OE UK, market intelligence manager Ross Dornan told reporters.
Next, we have the top news in metal markets.
The United States and Japan on Tuesday announced a trade deal on electric vehicle battery minerals that is key to strengthening their battery supply chains and granting Japanese automakers wider access to a new $7,500 US EV tax credit. The swiftly negotiated agreement prohibits the two countries from enacting bilateral export restrictions on the minerals most critical for EV batteries, according to senior Biden administration officials. The minerals include lithium, nickel, cobalt, graphite and manganese. The deal also aims to reduce US-Japanese dependence on China for such materials by requiring collaboration to combat non-market policies and practices of other countries in the sector and on conducting investment reviews of foreign investments in their critical minerals supply chains.
Iron ore futures extended their rebound on Tuesday as easing worries about the banking sector lifted steel price benchmarks in Shanghai, though lingering concern about demand prospects in top steel producer China limited gains. The declining Chinese portside inventory of iron ore also provided support to the steelmaking ingredient, which hit oversold levels last week amid concerns particularly about a drop in construction steel demand. The most traded May iron ore on China's Dalian Commodity Exchange ended daytime trade 1.8% higher at 882 yuan, $128.11 a ton. It climbed 1.3% in the previous session, snapping a 7-session slump. We will now look at the top news in the agricultural sector. Ukraine's grain exports for the 2022-23 season were down 17.7% to 36.9 million tons as of March 27, reflecting a smaller harvest and logistical difficulties caused by Russia's invasion, Agriculture Ministry data showed. The ministry said Ukraine had exported 44.8 million tons of grain as of the same date last year. The volume so far in the July to June season included about 12.6 million tons of wheat, 21.7 million tons of corn and 2.27 million tons of barley. The ministry said grain exports in March had reached 4.63 million tons as of March 27.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.